I think Sensex has chronicled the story of India's economic growth over the last 40 years. There is a very famous phrase they use in Hindi, "Bazaar kaisa lag raha hai," and it's synonymous with the level of Sensex. And these companies are L&T, Reliance, HUL, and ITC. You had EPFO, the Employee Provident Fund Organization, deciding to put monies in the leading indices. Until 2014, the AUM of passive in India was just shy of 10,000 crores. And in the last 10, 11 years, that number from under 10,000 crores is today in excess of 13 lakh crores.
Hello and welcome to this episode of Capital Markets Masterclass with BSE. I am Vinaya Deshpande Pandit. I'm the Maharashtra Chief of Bureau of The Hindu and a journalist with over 20 years of experience. The Hindu has been a beacon of ethical, impartial and in-depth journalism for 147 years now. The Bombay Stock Exchange, where we are sitting right now, is just as old. And this year, the Sensex has turned 40. And that's why we have with us Ashutosh Singh, who's the MD and CEO of BSE Index Services Pvt Limited, a wholly owned subsidiary of BSE. He has over 20 years experience in financial services industry and he works with market participants to offer suitable indexing solutions, advocates for passive investing and encourages retail investors to begin their investment journey through mutual funds. So, sir, welcome on the show.
Thank you so much for having me on the show.
As the MD and CEO of BSE Index Services Pvt Limited, what are your thoughts on Sensex completing 40 years? That's a milestone.
In fact, it's not just a milestone. I think Sensex has chronicled the story of India's economic growth over the last 40 years. It's a story of setbacks and comebacks. And of course, it's a very proud moment, not just for me as an MD, but I think for every Indian who in whatever capacity is associated with the capital markets. In the last 40 years, obviously, we've seen a lot of changes that have happened in the Sensex itself. When it started in 1986, most of the companies that were part of the Sensex were from energy, manufacturing sector. We've seen the changes that have taken place over the decades, over the years, where from being an energy manufacturing led index today, it's financial services that's come to the fore with a very high weightage in the Sensex. You have consumption stocks in the Sensex. So we've seen a lot of changes that have happened on the structure of Sensex. Also, when Sensex started, it was purely an economic gauge. It was a good barometer for measuring the economic health of India. And, as we've progressed, today it's become a very integral part of the portfolio of so many Indians. With the rise of passives in India, with the role Sensex has played in terms of giving a very, very credible option for investors in India, we've seen those changes also take place. So, 40 years, it obviously is a very, very proud moment for us. But I'm sure the index will continue to be the mainstay. And as they say, whenever people talk about how do the markets look, there is a very famous phrase they use in Hindi, "Bazaar kaisa lag raha hai," and it's synonymous with the level of Sensex. So I'm just hoping that Sensex has managed to see all these evolution in the last 40 years and managed to stay very relevant. And going forward also, I'm pretty hopeful that Sensex will continue to be the mainstay for capital markets in India.
I would urge you to just try and explain in simple layperson terms for the benefit of retail investors about how is Sensex calculated on a daily basis.
Okay, this is going to get slightly boring because this is a technical question, but I'll
But the
attempt.
whole
Of
attempt
course.
is to make sure that there is awareness among the viewers and among the investors. So if I may please coax you into this.
Yeah, absolutely. So, just for the layman, since every index, not just the Sensex, but any index that we calculate in the index company, it starts off with having a parent universe. So the parent universe for the Sensex is BSE 100. Simply said, all the stocks are rank ordered in terms of their free float market cap and also in terms of their total market cap. You select the top 75 stocks from free float market cap. You also do the same thing on total market cap. And let's say then you have a universe, because this is either or, then you have a universe, let's say, of 80, 85 unique stocks. And after you have that universe, there are certain other conditions like a FNO flag. So Sensex basically has constituents that are part of the FNO universe. So the FNO flag is applied, and then the stocks are rank ordered in terms of their free float market cap, and weightages are then given to the stocks in terms of the free float market cap of each of the constituents. So, in fact, this also has been an interesting journey. Sensex used to be a total market cap driven index till 2003, September 2003, and that's when the change happened, where the calculation of the index started happening on free float market cap, because there are certain stocks which have a very low free float market cap portion that makes investability slightly difficult. So that's when I think the changes took place in the industry, and Sensex also, as a result of that change, moved from total market cap driven index to a free float market cap driven index. Simply said, it only means that earlier the weightages were assigned purely on the total market cap of the 30 constituents. Today, the weightage of each constituent in the index is assigned basis its free float market cap in the universe of 30 stocks.
So it's more nuanced now.
Uh, it is more investable. I would like to say it is more investable now.
So it's more of a practical guidance for those who want to look at the top stocks.
Absolutely. Because I think ultimately investment decisions, and especially given the rise of passives in India, investability, liquidity, all these things also become very important considerations. So free float market cap driven approach just takes you in that direction where, it becomes a more investable index, so to speak.
So, sir, just to break down this jargon for the layperson, what exactly is free float market cap?
Oh, I must apologize. There are certain things as functionaries and professionals in the field we take for granted. But you're totally right. I mean, free float market cap, it's important for us to decode what it means. So let's just say there are 100 shares that the company has issued. Of the 100, there'll be a certain percentage of the 100 which will be held by the promoters. Some could be held by strategic investors. So basically, these shares do not come for trading to the market on a daily basis. So that is why they are classified as non-free float. Free float is generally shares that are held by investors other than promoters, other than strategic investors, other than Government of India. So basically, shares that come to the market for trading on a daily basis, which basically makes them also investable, is considered to be free float shares. Thanks for making me expand on that.
Thank you for explaining this for the layperson in a non-jargonized manner. So, as you rightly said just a while ago, that everyone refers to Bazaar kaisa hai, and the first thing they look at is the Sensex. Sensex has been a vital indicator of market performance for decades now. How would you describe its legacy and significance in shaping India's financial ecosystem?
I think Sensex, as the first stock market of index of India, has obviously played its part in democratizing capital markets for the retail investors, has played its part in terms of being a very robust indicator of the economic health of the country. And if you could just go back to the origin of Sensex in 1986, when Sensex was formed, you just had a few thousands of investors, and look at where we are today, where the number of unique investors are north of 14 crores. So, and in the journey of Sensex itself, all the companies that have been part of the Sensex have played their role. So I call them part of the Sensex family. So in the last 40 years, we've had 97 companies, just under 100 companies that have been a part of Sensex at some stage or the other. In fact, 4 of them have been a part of the Sensex throughout this journey from the day one till till the time of recording. And these companies are L&T, Reliance, HUL, and ITC. It has got a very rich legacy, and it has, the amount of ups and downs it has seen. Like I mentioned, that it started with just 100 points, and today where it's reached 85,000 points, that itself translates to a compounded annual growth rate of 13.5%. But if you throw in also the dividends and rights issues, bonus issues, somebody who had just invested and followed the Sensex stocks for the last 40 years would have made a CAGR upward of 15%. So that is one of the best returns that have come from any asset class. So it's a rich legacy, and it's gotten richer as now it has started to democratize access for the retail investors in terms of now there being many passive funds available on the index. And not just in India, in fact, Sensex also became the first index that was tracked by any global asset manager, first India based index in 2007 when BlackRock launched an ETF on the index. So, yeah, clearly rich legacy, and we just hope to take this forward.
After BSE took over the stake from S&P DJI, how are BSE indices evolving to meet the growing and diverse needs of India's capital markets?
That's a very good question. And in fact, before I even attempt to answer it, at the very outset, let me thank for the role S&P DJI has played in the JV. JV was formed in 2013, and it was only last year that BSE acquired S&P's stake in the JV, and since June of 2024, we are running it as a wholly owned subsidiary of BSE. But S&P obviously brings with it decades and close to a century's experience in terms of managing indices. So what they've left behind for us, what we've inherited from them, are very strong governance frameworks, are very strong index systems, and building on that, in the last 1.5 year, what we've attempted to do is work very closely with the capital market constituents and launch indices that are relevant for the market. So, just to share some numbers, in the last 1.5 year, we've launched 37 indices. We've had close to 35, 36 passive products being launched on our indices by mutual fund companies, by insurance companies. So that's a new area that we've opened up. So earlier, it was just mutual fund companies that were using our benchmark and launching products, and some PMS firms. But now we've extended it beyond these two asset managers and gone into the insurance space as well. So since the time we've taken over, I think the mandate we are driven by, and in fact the objective we are driven by, is simply working with working with all the asset managers across the board, listening to the voice of the customer, and trying to launch products that are relevant not just for the asset managers, manufacturers of product, but even for the retail customers. Today the product range has broad market indices, has factor indices, has thematic indices, has sectoral indices, and now going forward, we are also looking at getting into the debt index business. So that's been the last 1.5 year, very, very eventful. Our numbers speak for themselves. So in fact, in the 5 years before we took over, our launches from mutual funds would be in the order of 5 to 7 per year. And as I said, in the last 1 year itself, we have had 37 launches. So clearly, it is a 5x, 6x growth from what we used to do. So eventful times, and I'm sure we will take this robust journey forward and keep launching products that investors find merit in and the asset managers find merit in.
Wow, you're saying 37 indices in a year? That's such a short span. What I would really like to know is, how do you decide on which index to launch?
Broadly, we have a two-pronged approach on this. We have a product team, research team within the index company that does a lot of extensive research, tries to identify white spaces in terms of products that will be relevant for the retail investors. We also track where the flows are. So once these white spaces have been identified, we plug those white spaces through launching indices that are not currently available in the ecosystem, but which we believe will make a lot of sense because of the extensive research we carry out, or also by just looking at the money flows. We know that there is certain themes or certain index categories are getting a lot of attention. So to plug those white spaces, we keep launching indices. Some examples would be BSE India Sector Leaders, which came through an endeavor like this. BSE 1000, again, we felt was an index which was timely because Indian markets in the last few years have really gained a lot of depth. In fact, I always give this example. Today, the 1,000th company's market cap is higher than the market cap of the 500th company 6-7 years ago. So clearly, capital market space, the depth and breadth in the capital markets is evolving, and we felt the timing was right for such launches. So that's one part of the strategy where, like I said, the product team, the research team carries out extensive research, identifies white spaces, also looks at where the money flows are, and launches products to plug those gaps. And the other approach is we work very closely with the ecosystem players. So we work very closely with the asset managers who may come with an idea, skeleton of an idea with us. And once we have the skeleton, we flesh it out again by doing a lot of back testing, by doing a lot of extensive research. And once the finished product is launched, then because since it's the ideas come from asset managers, they are also keen to launch products on these indices. So that's the other way we launch indices, where listening to the voice of the customer, could be insurance companies, mutual funds, PMS firms, so on and so forth. We launch indices that kind of meet the requirements of the asset management industry overall. So these are broadly two ways, and of course, we also look at international trends and try to launch indices that could, at this point, seem like they're ahead of its times. But yeah, so these are broadly two ways we launch indices: internal research and voice of customer.
So that's extremely interesting. We've been globally seeing this trend of passive investing being on the rise. Do you see India following that global trend as well?
Oh yeah, absolutely. And let me preface my response by actually sharing some of the things that have actually helped entrench the passive culture in the country. So I think passive started in the early 2000s, but for the real traction in passives came only, I think, after 2013, 2014. That year, I think, was very seminal. You had EPFO, the Employee Provident Fund Organization, deciding to put monies in the leading indices. And that kind of really got the passive story growing. In fact, until 2014, the AUM of passive in India was just shy of 10,000 crores. And in the last 10, 11 years, that number from uh, under 10,000 crores is today in excess of 13 lakh crores. So it's a 50% CAGR kind of growth in the last 10 years. And yeah, I mean, what really kickstarted the journey was EPFO deciding to put money in the leading indices through ETF route. Second big moment came when the government of India also started looking at passive products for carrying out their divestment programs. So we had the Bharat 22 mandate come our way, which was basically a disinvestment program by the government of India in the 22 PSU companies. So that also saw some traction. Then the regulation around categorization of schemes by SEBI, that was another shot in the arm. So I think these two or three things really got the journey started. But like you rightly pointed out in your question itself, we are still a long way away. So despite the 50% CAGR growth, as a percentage of the overall AUM, passive is about 17%, 18% of the overall AUM in India. Whereas if you compare that to a market like the US, where again the passive journey started in 1975, but for 30, 32 years until GFC happened, they also had a 17%, 16% share in the overall AUM, right? And last 15 years, people have realized in the US, and I'm sure that realization is dawning upon the investors in India too, that in the long term, it's very difficult to beat passive for the inherent advantages passives have. So one is the low cost advantage. They tend to be cheaper than actively managed funds. The other is investors have really taken to passives because of the other advantages like transparency in the portfolio on a daily basis. Just by tracking the index, they know what's there in the portfolio. So that's another big advantage of passives. And thirdly, performance. I mean, I think there is preponderance of academic research, preponderance of documentary evidence that in the long run, it's very, very difficult for active managers to outperform passives. So I think these have led to the growth of passive. And today in the US, the passive AUM is already in excess of 50%. So we are well and truly on the journey. How many years does it take for us to move from 17 to 30 and then 30 to 40? That I think is anyone's guess. But I think the journey is begun in all earnest, and the time to come is looking very exciting from passive point of view.
But the question is, how can Indian investors effectively leverage passive investing opportunities to build long term wealth?
So I think there has been one mindset change. So earlier, when people are looking at passives, they used to consider it more like a satellite strategy, core and satellite. But I think people now have started realizing that it is not the not the investment style, whether active or passive, that should define core or satellite. It is basically the stock selection approach that should define core and satellite. So I think people have started realizing that, and which is why now in many portfolios it's become part of the core portfolio. And for the satellite portion, that you have the narrow and niche stock selection strategies, which are represented through sectoral indices, thematic indices, factor indices. So there are multiple ways that people can whet their appetite. If people are not entirely happy with, let's say, a broad market strategy, then there are factor indices too, which sit nicely between active and passive, where basis of certain factors, could be quality factors, could be value factors like P, PB, PS, stock selection is done. So that way, these are strategies that give you the advantages of transparency in portfolio, that give you the advantages of performance in the long run. But at the same time, they are not entirely passive. In the conventional sense of the word. While they are passive, they follow the index, but even the index in the construction, inherent construction itself follows certain strategies. So which is why we like to think of them as strategies that are sitting nicely between saddle the active and passive space pretty well.
Now, if you can tell us what are the products and services under BSE indices that are currently available for investors to gain exposure to capital markets through passive investing?
We have pretty much the entire range. So like I said, on the equity side, we've got broad market indices like Sensex. We also launched a few innovative indices like BSE 1000. It's the first index in the country that covers 1000 stocks. We have obviously the loved and very, very widely followed indices like BSE 500, BSE 200, BSE 100. So these are simply market cap indices where you pick stocks which are the top 30 in terms of free flow, top 100, top 200, top 500, top 1000. So these are indices that would fall under the broad market index strategy. Then you have sectoral indices, which are the narrow and niche, where you pick up sectors in the country, like could be automobile, could be IT, could be banking, and you launch. We have indices on pretty much covering all the important sectors of India. Then you have themes. Consumption, like everyone is talking about, has become a very, very big theme in India, and the potential for this theme looks pretty promising. As the per capita GDP crosses a certain threshold, which in our case happens to be 3,000, and we've seen through the experience of other countries, this number bears a certain significance, because that's where your disposable income start to go up, and people start looking at discretionary spends a little more aggressively. So that becomes a very important theme. So you have indices that play themes like infrastructure theme, like a consumption theme, that pick up slivers from, let's say, from a macroeconomic indicator and put it all together. So we have thematic indices, and then of course we have factors which I touched upon earlier, like the quality factor, value factor, the momentum factor, so on and so forth. So we have the whole gamut on the equity side, and we have now mutual funds also launching products on our indices. Because while we may have the gamut, but unless there are mutual funds who bring these products to life, the retail customer cannot really participate. But thankfully, even that is happening now. So pretty much all the four categories have mutual funds now that have launched products on our indices, so customers can take exposure to these indices through investing in those mutual funds that very closely hug and track the index.
Mr. Ashutosh Singh, I thank you wholeheartedly for your precious time and for joining on this special episode of Capital Markets Masterclass with BSE.
It's been a pleasure. Thank you.
Thank you so much for watching.